Welcome back everyone to another market review for E-mini NASDAQ, and we are reviewing the ICT 10 to 11 a.m. silver bullet model for the Monday price action of September 9th. So jumping right into this, we are on the daily chart here, and the only thing I was looking for was this new day opening gap, possibly treating that as resistance going lower, because we were above the midnight open, and my rule states that if I'm above the midnight open, I can only be looking for sells. And if I'm below midnight open, I'm only going to be able to look for buys. But really, that's all I was looking for going into this day. And this other level here possibly could have been this inverted fair value gap. But for the day, it looks like we never were able to reach that. And we also have this new day opening gap here, but we were already so extended. And I'm going to show you guys when we drop down to the lower time frames. So here we are on the 1 hour chart. And look at the new day opening gap right away. As you can see, look at how price is respecting it. In addition, here we have a premium fair value gap here. As you can see, if you take the consequent encroachment of this SIBI here on the 1 hour, look at how the bodies stay below it. So that's what you want to see. And in addition, these up close candles were engulfed by these down close candles. So you could almost treat this like this new day opening gap area as a bearish order block on the 1 hour. And something else to note as well is we also have a bullish breaker as a possible target going short in this ICT silver bullet session. As this up close candle here, you have a low, high, lower, higher high. And if you take the entire candle, I took the low and the high of it, you draw a consequent encroachment. That was my main terminus going in for this short today. Something else I also noted is that 10 a.m. opening price, as we always want to see if we can get a double discount or a double premium. So if you're above midnight opening price, as we can see here, and above the 10 a.m. opening price, and you combine that with higher time frame PD arrays, you're going to be able to get a better framework going into the day, especially getting more confidence in your trade. Also, I marked out liquidity that we're taking. So we're taking out buy stops, going up, heading higher towards that new day opening gap. So this is telling me that price is trying to build in a premium to then sell during that ICT silver bullet session. And here we are on the 15-minute chart. As we can see here, remember, this is that consequent encroachment of the 1 hour SIBI. We also have another SIBI in the 15-minute time frame, and I marked it out 15-minute SIBI. So you're combining higher time frame PD arrays that are going to work in line with the direction that you want to see price head towards. So we have the new day opening gap, we have the consequent encroachment of the 1 hour SIBI, but then you also have a 15-minute premium SIBI as well that price is trading into. And remember, we're above the midnight opening price, right? And we're above the 10 a.m. opening price as well. So price is in a really deep premium. The only thing you want to be looking for here is shorts, with your main draw being obviously the 1 hour breaker that we talked about, that bullish breaker. And we also could take partials here because there's going to be sell stops below this low and this low as well. And you could also treat the midnight open as a possible target, as we can see price trade below it as well. Here we are on the 1 minute chart, and I'm going to show you guys how you could have framed the setup going into this day. Now, before I really break any of the trade that could have happened there, the first thing was the draws. So remember, here's these equal lows here in combination with the bullish breaker from the 1 hour and the minute opening price. Something else to note is we have these equal lows here and these equal lows here. Something else you guys may not have noticed as well is how we have a market maker sell model as we consolidate, go up, consolidate again, and we consolidate one last time right up in here. So that's what you want to see, price taking buy stops, especially in the form of a market maker sell model. That way you have higher confidence going into this day here. And taking a closer look, what do you see here? We see the bodies respecting that new day opening gap, which is what you want to see, in combination with the higher time frame PD arrays that we had, which was the 1 hour SIBI and the 15-minute SIBI. We see price break lower, breakaway gap right away. That's what you want to see. And we see price form a bearish breaker. So you may be asking, how is this a bearish breaker? Well, you have a high, low, higher high, lower low. So we see price trade through it, making that lower low, and then we trade back up into this. And I always talk about how if you have multiple PD arrays working for you, you're going to have better confidence going in. In this case, as we can see, if we zoom in here, there's going to be a small volume imbalance right in here. So if you enter either here or here, you have a higher confidence going in for the day. So you remember, you're combining multiple PD arrays, the breaker and the volume imbalance. And let's say you weren't able to get in there. You also have this bearish order block, as this up close candle was engulfed by this down close candle. So we're going to mark that out. We see price trade lower. I always talk about how gaps can be fair value gaps. ICT talks about this as well. You take this down close candle here, as this was the one that made the newest low. You draw that out. Look at how price is respecting the consequent encroachment of it. Look at the bodies, they're unable to get above the mean threshold of this specific gap. And once again, we have a bearish order block, as this up close candle was engulfed by this down close candle. So you simply draw your bearish order block. So really, these multi-PD array analysis is giving you better confidence going into your trading day. We then see price dramatically displace lower, breakaway gap again. If you don't want to see, if price is having heavy bearish order flow, you don't want to see price trade back up into that breakaway gap. We trade lower, bearish order block again, as this up close candle was engulfed by these two down close candles. Draw that out. Look at the bodies respecting that bearish order block. We trade lower, and don't forget, like I always say, wicks are gaps. This up close candle here was engulfed by this down close candle. You draw that out, acting as not only a bearish order block but a gap. We see price trade up into it once, twice, and one more time. But the main thing is, look at the bodies. So the wicks are doing the damage, but the bodies tell the story. And something else to note here is the 1050 macro started right here. So you need to be wary of that as well. So we manipulate higher, taking out buy stops here, and then we go lower, taking out these sell stops as well. We have a larger SIBI here after price heads lower. We fill that, manipulate once again, and then we head lower. Again, the final terminus was the consequent encroachment of that 1 hour bullish breaker we talked about, but you can of course exit right here before the macro starts as well. You already went below midnight open, so there's really no need to really push it and go down lower. But again, if you held through all this, you can easily try to see if you can take it there. But unfortunately, we didn't get there for the whole day. So all in all, it was a pretty clean day. You had the breaker, we had order blocks and bearish PD arrays being respected. Although price in the beginning was a little choppy for that breaker, we still had some nice extensions moving lower. So I hope you guys found this market review insightful. Please be sure to comment down below, like and subscribe, and I'll catch you guys in the next one. Peace.